Hi. So, sorry, a little technical hiccup. So, let's continue. So awaiting the rest. Continuing, awaiting the rest. See you on the other side. Okay, so let's get started. So today's class, it's around 11:46. So let's get started on Tuesday. Give me a minute. So more people joining. So let me share my screen. Okay. I think there we are. Okay. So let's get started. Still waiting for guys to get on board. So let's continue. At least we have some people. So we are waiting for who else? I think that's okay. Okay, the rest will join as we continue. I hope I'm visible. So let's get started. I'll be waiting for the rest as they come. So today we are going to talk about fundamental analysis. So, and I had told you, minute is in case got so in case you have any questions, you can always text here. So that's one. So number two, I think we are in progress. Participants are there. And then I needed to see where are we? Oh, there. So let's get started. So I think we are good to go. My volume, everything is ready. So what is fundamental analysis? So I was saying, as we get started on class today, I'll only touch less graph and more chart or more theory. We've been having a lot of technical analysis for the last 1 or 2 months. Fibonacci, moving averages, we did oscillators, we did the last class divergence and Fibonacci trading. So today took a little breather because we're almost done with our class, because after we do fundamental analysis, by now you should be having a good trading plan, because the idea with trading, you always need a good trading plan. Apart from having a good trading plan, you also need to learn how to execute it. You need to know when to get in, when to get out. So let me get you started. So what is fundamental analysis? So this now is what moves the economy. Like, for example, our economy in Kenya, for example, the price of bread or milk has to be determined, it has to be determined by the cost of living through the prices of fuel. So if the price of fuel or oil goes up, of course, standard of living, prices of commodities goes up. So that's what we'll be talking about today. So mostly I'm dealing with economies. You can see this is the world economy here. I have Brazil, I have the US, I have Canada, Africa is here, Asia is here, Australia and New Zealand and the rest. So we're looking at the global markets, news, economies, and what affects. Like we've been having this story lately of Evergrande. It's a real estate company, one of the big real estate companies carrying over 2% GDP of China. It's been hit by big debts and they're almost defaulting in their loans. So basically when that happens, you have a market dive. So let me show you what's a market dive. It's a big sell-off that occurs. So I'll show you with the futures. So I have to go this other way. So I'll be using mostly the US economy because it's one of the most vibrant and very liquid market. So at least this one you have. I'll also send you a screenshot on this on the group. So don't worry about the USD one. So for today, let's use this one. Yeah, you can see there was a big dip yesterday. So this dip is because of that company I'm telling you about. So what happens when there's a big dip? Of course, there's always another recovery. When a big sell happens, everything that goes down has to come back up. So that's what we'll be talking about today. I'll also be relating with COVID, as I believe since last year, I think March, April, we've been having most of these classes online, and they've been helping a lot. Hoping you've been following them on YouTube, because I always post them on YouTube. So for today, let me start with you with fundamental. So what is fundamental analysis? So just a minute. So fundamental analysis basically is the study of how global economic news and other news events affect financial markets. So news always do affect financial markets. So fundamental will encompass any news event, social force. Social force, for example, when you go to a specific country, you'll find probably those guys are very active in work, others are not very active. So depending with, of course, their upbringing, resources, their culture, their attitude towards work and everything. So that's the social force. So any other news events, there can be a tsunami, can be an earthquake, it can be, there was a time Saudi Aramco was bombed. Why? They were trying to bring the prices back down by destroying supply zones. So that's a news, economic announcement, federal policy change, company earnings and news. So we also have company earnings, means every quarter company releases their earnings of how they have been performing. And then the news, and perhaps the most important piece of fundamental data applicable to the Forex market, which is a country's interest rates. So most of what we do in Forex is governed by interest rates and the interest rate policy. So I'll also be touching a little bit on that. So the idea behind fundamental analysis is that if a country, the idea behind fundamental analysis is that if a country's current or future economic picture is strong, their currency should strengthen. So that means a strong economy attracts foreign investment and businesses. So when we are looking at a country, we are looking at the current and future economic outlook. Of course, we are looking at the interest rates, the value, the purchasing power of the currency, the number of jobs created, economies or companies running. We need to look at interest rates. We need to look at GDP, everything. That's what I'll be tackling today. So a strong economy attracts foreign investment. That's what I want you to know. So of all these factors we are looking at, we only need to make sure the economy is strong. So a strong economy attracts foreign investments and businesses. And this means foreigners must purchase a country's currency to invest or start a business. So if they come here, for example, there's something called FDI. FDI is when investors are pumping money into a specific country. That means it's foreign direct investment. They must have seen the current and future economic outlook of that country is good. So that's what we are looking at. So that means foreigners must purchase a country's currency or invest or start a business there. So essentially, it all boils down to supply and demand. A country with a strong and growing economy will experience stronger demand for their currency. So if a country is strong, if the economy is strong, there'll be more demand. For example, here in Kenya, if we are having better economic standards, you'll realize that more people will want to purchase the local currency, which will work to lessen supply and, of course, will drive the value of the currency. So we have said I'll be looking the chart according to the US economy, because at least it guides us with the US dollar to know what is happening in the markets. So for example, this is a good example. If the Australian economy is gaining strength, the Australian dollar will increase in value relative to other currencies. One main reason of a country's currency becomes more valuable as its economy grows and strengthens is because a country will typically raise interest rates to control growth and inflation. So higher interest rates are attractive to foreign investors, and as a result, they will need to buy Aussie dollars in order to invest in Australia. This, of course, will drive up the demand and price for the currency. Why do they hike? In case we have a heat up. Heat up means there's more demand, extreme demand. The prices are very high. Economy is booming, means people are making a lot of money. They would increase the interest rates to reduce the money in circulation. Why are they reducing the money in circulation? Because people have too much money. We don't want inflation also to hit above the roof. So that's why they would hike. Last year, they had to cut the interest rates. So let me show you the economic calendar as we start our class. So I'll show you, and this week, actually tomorrow, we'll be looking at the Fed and what they'll be, if they would tamper the interest rates or not. So give me a minute. So I'm going to look in relation to last year when COVID hit, so that at least you can be able to see when an economy is doing well or when an economy is not doing very, very well. So let's go to the interest rates. So on this side, you go down here. So I'll have to click on the calendar. Then I'll go down here. Yeah, you can see. So let's go to the US dollar here. Then I'm going to click on the history. You can see the last time there was no change. So this was September 22. So let's open the graph or the chart. Okay, here it is. So you can see interest rate at which depository institutions lend balances held at the Federal Reserve to other depository institutions overnight. Actual greater than forecast is good for the currency, scheduled 8 times per year. So let me show you on this side. So you can see it's been 0.25% or near below zero, but you can see this was on March 3rd, 2020. You can see it was 1.25%. So they had to cut 1 basis point from 1.25. Now it came to 0 or lesser than 0.25. So you can see it has maintained. So now if they hike or if they want to hike the rates, most likely they would want to add a 1 point or something. So why would they want to hike? In case the economy is doing very, very well. So I'll go to the graph on March 3rd, 2020, so that you see what happened. I'll just use this graph using a longer time frame. So this is what I wanted you to see on the weekly. So this was the effect of COVID. Of course, there were deaths, and you know what happened. And now we started recovering slowly. We're still on that path of recovery, though we have not gotten there yet. But you can see at least we are somewhere. So you can see at least we passed the 50 mark. So you can see at least the market has been on an upside. Why has the market been on an upside? Because after the COVID hit, there was stimulus checks that were released. People are saving more. So almost 6 months, they were getting around $600, $1,200. So for the stimulus check for those guys who lost their jobs. So what are we doing? Right now, what we are doing, we are recovering. So what will most of these people be doing? They most likely might be investing in the stock market, for example. So you can see, so this is what I wanted you to see. So let's continue so that at least you can go through most of these events. So we have major economic events. Those ones are the ones we'll be looking at today. So this, of course, will drive up the demand and price of the currency will lessen the supply of it. So the first one will be GDP, that is gross domestic product. Gross domestic product, GDP report, it's one of the most important of all economic indicators. It is the biggest measure of the overall state of the economy. So for us to know the value of us, how much are we worth as a country, you're looking at the GDP. The GDP number is released at 30 EST on the last day of each quarter, and it reflects the previous quarter's activity. The GDP is the aggregate total monetary value of all goods and services produced by the entire economy during the quarter. So we are looking at anything monetary in value, whether it's goods or services that have been produced in that quarter. Every quarter has at least 3 months. So during the quarter being measured, this does not include international activity. The growth rate of GDP is important, however, to look at. Why? We need to know how did we perform? Did we sell more on the retail sales? Did we produce more on the producer and manufacturers? Did we create more jobs? All those things combined is what we are having GDP or gross domestic product. So we'll have to always look at this calendar. Let me show you the calendar again. So we'll go back to the calendar. So let me use for today, at least because the Forex Factory usually shows you these numbers. These numbers are the ones you can see. This one, previous, forecast, and actual. So if you're having like here, forecast was 0.8, then the actual becomes greater than, you can see it was 1.5%. It will turn green. And of course, that is to mean this currency or whichever currency pair you are trading here should strengthen on the economic report. Then we have elections. So elections are usually a bit different. We have in Germany election, I think should be next month, 2 or 3 weeks time, should be having. So now that will affect the euro because we need to know whoever they are going to elect, what policy is this person coming with? Will it help? Will it assist the people, the citizens? Basically, what will be happening? So we have to look at the economic calendar. Let's keep going. So we have trade balance also. Trade balance. Now the exports, we have to produce. So when you're coming into this business, I usually tell people, think more of producing than consuming, because when you're producing more, of course, you'll be making more money. If you're more of like consumer, you're always waiting for, people to buy, people to sell to you for you to buy. But if you're producing, of course, you'll be making more. So trade balance we are looking at is a measure of the difference between imports and exports of tangible goods and services. So every country probably has oil or gold or natural resources or gas. It can also even be agriculture, food, like us. Here, mostly we are doing coffee and tea and maybe flowers. Just know we have exports is what is going out and imports is what is coming in. The difference between these two is what we are calling a trade balance. So the level of a country's trade balance and changes in exports. So we are looking at the changes. Are you selling more or are you buying more? Are you more of a consumer or are you more of a producer? So we are looking at the level of a country's trade balance, and changes in exports versus imports is widely followed by an important indicator of a country's overall economic strength. If we sell more, of course, we'll have a surplus. If we are buying more, of course, we're having a deficit which we have to take care of. So it's better to have more exports than imports, as exports help grow a country's economy and reflect the overall health of its manufacturing sector. So mostly on trade balance, we are looking at these big manufacturing companies, or we are looking at how much are they producing, how much are we selling, how much profit are we making when we sell goods out there. So let's keep going. So we also have consumer price index. What is consumer price index? CPI report is the most widely used measure of inflation. This report is released at 8:30 a.m. EST around the 15th of each month, and it reflects the previous month's data. So CPI measures the change in the cost of a bundle of consumer goods and services from month to month. So this one has many. We have CPI and core CPI. Core CPI, of course, I'll show you what it's all about. I'll also be sending in some of these. I'll send you a write-up of all these to you, to the WhatsApp after today's class, and I'll also post the link. So let's go to PPI. PPI along with CPI is one of the most important measures of inflation. This report is released at 8:30 during the second full week. Oh, sorry. Where are we? Here, we were here. Second full week of each month and reflect the previous month's data. The producer price index measures the price of goods at the wholesale level. So to contrast with CPI, the PPI measures how much producers are receiving for the goods, while CPI measures the cost paid. So we only need to get the difference. CPI is measuring how much producers are receiving for the goods, while CPI measures the cost paid by consumers for goods. Then we also have employment indicators. Most important employment announcement occurs on the first Friday of every month at 8:30 a.m. EST. This announcement includes the unemployment rate. So unemployment rate, we need to know, are we adding more jobs or less? That's what, if the unemployment rate is high, of course, we added less jobs. If the unemployment rate is low, we added more jobs. So we are looking at jobs created. What are we looking at? This includes unemployment rate, which is the percentage of the workforce that is unemployed. We have to look at people employed versus people that are not employed. The number of new jobs created. So first we look at the workforce that is unemployed. We are also able to track these using things we call jobless claims, which are always released at least at the same time, almost I think with the employment indicators. So the number of, the employment reports, the number of new jobs created, the average hours worked per week, and the average hourly earnings. So you have to also account for how many hours were worked per week and also how much earnings were and every hour or hourly. This report often results in the significant market movement. You'll often hear traders and analysts talking about NFP. This means non-farm employment report, and it's perhaps one of the most important reports each month that is the greatest power to move the markets. At least it moved the market between 100 to 150 pips, even up to 200 pips. Then we also have durable goods. Durable goods orders report gives a measurement of how much people are spending on long-term purchases. So these are things that go for a year, 2 years, 3 years. So these are the durable goods. These are defined as products that are expected to last more than 3 years, like a car, a house, durable, anything that goes more than 3 years. This report is released at 8:30 a.m. EST around the 26th of each month and is believed to provide some insight into the future of the manufacturing industry. We also have retail sales. Retail sales index measures goods sold within the retail industry, from large chains to smaller local stores. And it takes a sampling of a set of retail stores across the country. The retail sales index is released at 8:30 a.m. EST around the 12th of the month. It reflects data from the previous month. This report is often revised fairly significantly after the final numbers come out. Then we also have housing data. This is real estate. What about this? Housing data includes the number of new homes that a country began building that month, as well as existing home sales. Residential construction activity is a major cause of economic stimulus of a country, and so it's widely followed by Forex participants. Existing home sales are a good measure of economic strength of a country as well. Low existing home sales and low new home starters are typically a sign of a sluggish. So even wherever you are, your home place, when you see new road or new construction or new building, new mall, that is to mean, of course, there's more business that's happening around that area. And that, of course, will spur economic activity. So that is housing data. So we are looking at how many homes were built that month, as well as how many home sales were, existing home sales that were sold that month. So let's also go to the last one, that at least we can see the chart, the interest rates. So the interest rates are the main driver of the Forex market. Welcome, Paul. So interest rates are the main driver of the Forex market. All of the above mentioned economic indicators are closely watched by the FOMC, or Federal Open Market Committee, in order to gauge the overall health. So what they are doing, the Fed, they are looking at the overall health of the economy. Should we tamper? Should we touch the interest rates? Are things moving well? Is the economy improving? Is it not improving? All those things. So all these are indicators. We call them economic indicators. And I'm going to send them on the WhatsApp group so that you can look at them in a nutshell. So the Fed can use the tool at its disposal to lower. So this is what they do on the interest rates. As I've showed you, they either lower, raise, or leave interest rates unchanged, depending on the evidence it has gathered on the health of the economy. So we have seen last year, they had to cut the interest rates. Why? All the economies were struggling. COVID hit, deaths, jobs went down, other companies were closing. So there was no money circulation. People were afraid. So what the investors do? They had to, hold their money, or basically put their money in a safe place. So when they did that, they had to cut the interest rates to encourage borrowing. They were trying to tell you, hey, I know things were bad, this and this happened, but we can at least try to keep things okay until we recover. So that's why they had to cut the interest rates, because now the economy was not doing well. If they hike the interest rates, of course, the economy is booming. Sometimes they just leave the interest rates unchanged, like what we have seen what they have been doing for the last time. So let's have a look at those interest rates again. Just a minute. So this is the graph. Yeah, so they've been remained unchanged since last year, March. So for me, I usually track them with a graph. So let's look at the graph. So this is the graph since 2010. So this was from 2009, there was a crash. And what happened? So let me squeeze this. So this was the change. So you can see 2016, I think there was a hike here, yeah. There was a hike, 0.4, they hiked again, 2017, 2018. You see, they were hiking. They hiked by the first 0.5 basis point, They went 1 basis point, 1.5. So it seems since 2016, I think since Trump got in, the economy was doing very well. So you can see that's why this looks like this. So when they hiked up to 1 point, hey, it went. Then now they had to cut. So this is 2019. 2019, they had to cut, and then now we had to go back. You can see 2020. So 2020 here, things had to go down. Anyway, don't worry about the graph. I wanted you to look mostly at this. This is the most important thing. Okay, welcome, Nene, and though a little bit late. So this is what we are looking at. So we are looking at this. So the idea is, you can see this is 1.25. So you can see they cut by 1 basis point to 0.25. So the most important thing you need to keep checking, especially when you're trading, is the interest rates, like this week. So let's look at this week. Today is 21st. Yeah. So when today is 21st, you can see the economic activity yesterday, today there isn't much. So this was AUD monetary policy. So anything you see as monetary policy, we are talking about the interest rates. So tomorrow will be a big day. It's one of the biggest days for us, especially because we are looking at the interest rates for the US. So you can see this is the Federal Open Market Committee economic projections. Then they will release a statement, and eventually they'll have a press conference. So tomorrow from 9 p.m. to maybe around 10:30 p.m. in the night, our time zone here in East Africa, we'll be looking at USD and any pair on the USD, gold, either it's pro-dollar or anti-dollar. So that we see, you can see it's still at 0.25, although I don't think they will change, because now the idea is all they need to do is look at this graph. So I look at this graph on D1. So you can see they can't tamper yet, because the economy has been sluggish, but it's been improving gradually. That's why you're seeing this graph like this. So it's been quite a very big bull run. You can see from here, this is S&P 500. So it's one of the wonderful, amazing tools to trade, because mostly you're always looking to either to buy the dip. And if it was like yesterday, I also sent another strategy on trading the sell-offs. So that one I'll also send you on the group. So I think that is good for today. So let's wait tomorrow. So tomorrow is the big day. Today is Tuesday. So we are waiting for tomorrow's press conference on FOMC. Then we'll be able to see, is there any forward guidance? There's something called forward guidance. So let's go back to our chart, because I think I'm done with theory. Yeah, so interest rates are done. So what's the difference? So we have done a lot of technical analysis. So by now, at least I know every one of the students have a trading plan on technical analysis. So what's the difference? So technical analysis and fundamental analysis are the two main schools of thought in trading. So if you really want to have an edge, you have to be able to combine your trading system or your trading plan with, of course, fundamental analysis. So technical analysis and fundamental are the two main schools of thought in trading and investing in financial market. Technical analysts look at the price movement of a market and will use that information to make prediction about its future price direction. So that's what technical analysis are doing. We are studying price action. We are looking at the price. We want to know where the price is going. When I look at this price right now on H4, I can also look at US 30, even NASDAQ. At least I can be able to see where the price is going. So basically that's what technical. So what about fundamental? Fundamental analysts look at economic events. So that's why today I had just to do the economic calendar. So you can see today I'm not doing a lot of charts. So why? We are just looking at the economic calendar to see what would be moving markets this week. I'm seeing even on Thursday, we are looking at the Swiss franc and the euro. Euro have German flash manufacturing. So we are looking at the manufacturing sectors. Most of the cars you use, okay, the German machines, we have Mercedes-Benz, Audi, BMW, and the rest. We are looking at the whole German economy on the manufacturing sector. Has it improved or not? If it will have improved by Thursday, this should be greater than. You can see this is 61.3. So this number that will come out here, if it's greater than, we will know that the economy in Germany is improving. And of course, the euro will be gaining. If it doesn't, the number is lesser than this, because the euro will be losing. Then we also have the asset purchase facility. That is the same thing. Monetary, you usually hear of bonds. That's what governments invest in. This is what we are calling the asset purchase facility. So this is for Thursday. So since tomorrow and Thursday, we'll be having a very, very, very busy week. So let's go back to our USD yuan, because at least I've been able to explain to you how the interest rates and economic fundamental analysis work. So for now, I'll just look at the graph of USD yuan, and then we can call it a day. So here's the graph. So there it is. So you can see it was a very big sell. You can see it. I'm usually tracking it with moving average 14. This is on SMA. So every time the candles, you can see every time they're below the moving average, of course, we are trending down. So right now, the price seems to have stopped at 200. This is 200 SMA. So I can show you, is it SMA? Yeah, it's 200 SMA. So if the price, of course, breaks this 200, we'll start trending up. But if it doesn't, you can see it has refused. Yeah. So now, because of tomorrow, so if they remain unchanged, we'll be waiting for the reaction of the dollar. So it's been quite relatively okay. So there it is. So you can see also on the weekly chart, it's just below 50. On the daily chart, let's see, it has crossed the 50, but seems to be going back. How about the 4-hour chart? It had crossed and went overbought, and I'm seeing a small M around here. So we had talked about double tops, double bottoms, M and W patterns on technical analysis. So for this one, I'll just wait for it the way it is, so that at least we are able to see. So this is USD CNY. So this was because of COVID. You can see, because now US was hit hard. So COVID started, this was February 2020. You can see there was a dip. That was 27/02/2020. There was a dip. Then the market started rising. Then here now, COVID hit around March, went up. So now China was dealing with their problems here. So that's why here now the dollar was gaining. They were dealing with infections, contact tracing, and sanitizing, and all that, and vaccines. Then now, US now was hit hard on June, when they were having almost 400,000 deaths and all. So when that was happening, now China had regained and had taken control of COVID. Now you see now, that's why this graph started falling. It fell up to this year. So I think US, because vaccines were released on November, October, so you can see January, February. So from March, you can see we are still falling up to now. So the reason is, it's because of COVID. This one purely was because of COVID. And of course, right now, manufacturing activity is high in China. It's low in the US. So that's why you're seeing, I was really shorting this one, or I was selling this one. So I'll also show you in response even to gold. So this is gold. Look at the gold chart. This was the gold chart since last year. So now gold was acting as our safe haven, because you can see, let me use the moving average 14 again, and 200. So this is gold. So I'll do 14. I'll only do 14, give it red, simple. You can see gold was rising. And then I'll also add 200, because 200 we said is the mother of all moving average. So 200, then we're going to give it maybe blue. Then we'll also add, you can see, so this is our gold chart. Then I'll also add an oscillator. We did oscillators last time, and we said RSI is one of the most important oscillators because it's tracking the real time of the price action at that moment. Yeah, so I think that's okay. So gold, you can see this was around March. So gold had to hit an all-time high, because now when economic crises happen, like the pandemic, investors are looking at a safe haven. They are looking to invest in something that will not lose value. Right now, we are battling inflation. We are battling all these things. We are battling rises, cost of prices of fuel and the rest. So that's why you see gold had to hit an all-time high, I think 2075, yeah. So you can see hit an all-time high of 2075. So I think it's good to always have history. So right now it's still at 1764. Then from there it dipped down, went up. It had to retrace back up to 1675. So I'm also going to send you these charts so that at least you have them with you. So after class, I'm going to send you the gold charts. And also I'm going to send you the S&P 500 chart. The reason why I'll send you is so that you can keep track. This is future and no history, past, present, and future. So we are looking at the history, the right now, and the future. So I'll also send you on that. What else? I think those were the two most important. Oh, I can also use Bitcoin because I'm just looking at safe havens. So when I'm looking at S&P 500, I'm looking at the stock market of the US. When I'm looking at the USD yuan, I'm looking at the dollar against, the US economy against China. When I'm looking at Bitcoin, now this one, I'm looking at a different case scenario because now this one works on its own. Where is it? Here. It's here. So what happened? This is my Bitcoin. So let's look from March last year, what Bitcoin did. Then we see if it can also be categorized as a safe haven. So let me use weekly. So weekly seems not to be working. Okay, there is Bitcoin. So Bitcoin hit 2020, was down by March. You can see it was really down. 2020, 0703. So on March, Bitcoin lowest March was 37.25. Wow. So you'd have made a lot of money on Bitcoin because you can see it surged all the way from 37.25 right now to 40,000. That almost times 10 or times 15. You'd have made 1,000% or 1,500%. So the reason is when inflation hits, investors are looking to invest their assets in tangible things that will not lose value. And this is one asset on crypto that doesn't lose value, the Bitcoin. So let me go back to my US 500 because of the US economy. That's where we started. Okay. A minute. It's right there. Yeah, so at least it's look like that. So I'll send you also the charts on this. And then from there, I think we're good to go. So for today, I was mostly talking about economies. I only touched the US economy because of the dollar. I touched S&P 500, I touched gold, and also I touched Bitcoin. So today, I think that's all. Unless we have any questions, I think I'll end my class at that. Do you have any questions? Any questions on fundamental analysis? Any questions? Fundamental. So do you have any questions? I'm waiting. So I'll also send you material. So give me a minute.
Hello, sir.
Yes, I'm here.
I have a question.
Yes, ask.
What has caused the recent crash in the crypto space, the currency space?
Oh, the recent crash.
Bitcoin.
Yeah, I saw in the morning. I think Bitcoin hit a low of 8% yesterday. So what it does, let me go back to Bitcoin chart in a few to answer your question. Where is Bitcoin? So for Bitcoin, it's here. Yeah, I'm seeing there was a big dip. Yeah. So this one, right?
Yes.
Yes. So now what Bitcoin does, it has to create highs and lows. It's only moved. Okay, it doesn't have fundamentals like the way we have the economic calendar. So all it has is volume. So right now, I think let me check for you. The market capitalization right now of Bitcoin is should be 2 trillion, right? Let me check on coin market cap. So it should be,
Okay.
yeah, how much? 1.93, yeah, 1.932 trillion. So for Bitcoin, I have some sources of news. It also has fundamentals, but they're not very, like, for example, if a country like El Salvador said they want to use Bitcoin as their own main currency, that's good news. So they also have their own fundamentals, but not many. So when I'm trading Bitcoin, I'm mostly looking for these sell-offs because they usually happen a lot. When you draw them,
Okay.
especially with, you can see it hit my low of 40,000 here. So what we'll do, I'll
Yeah.
also be explaining, and I'll send some material on crypto on the group if you're on the group, so that at least we can also be able to understand how to trade Bitcoin. Is that okay?
Okay.
Yeah. So for Bitcoin, their fundamentals are different, because sometimes you can see these white bars. This is to mean there are whales. Whales are people who dump and pump. So like here, they were pumping, they were dumping. You see, they dump, then they pump. When they pump, the market is going up. When they dump, the market is going down. So when they're pumping, is going up. So I'll explain more, because it's a bit different. It's a different market from what we do. So this one I'll have to show you later. Is that okay?
Okay.
Okay. So thanks a lot. Let's link up on WhatsApp for any questions, and thank you for today. And have yourselves a lovely, lovely week. So see you on the other side. Let me get you on WhatsApp in case you have any queries or anything. So thanks so much for today, and let me wish you all a very lovely day. So thank you. Then let's link up, because I need to know if you understood fundamentals and you have a good trading plan on the other end. So let me link you up and also say thank you for today. Have yourselves a lovely, lovely, lovely day. So at least today we were good. Where is it? Stop share. So let me link you up on WhatsApp. So in case you have any other questions, we can be able to answer them on the WhatsApp group. So thank you for today, and have yourselves a wonderful one.